Welcome, everyone. My name is Jeremy Smith, and I'm with Grand Station's online education team. I'll be your host for today's webinar, and that's Payroll Changes and Tools to Save Time. Your presenters for today will be David Webb and Laura West. Let me tell you a little bit about today's presenters. Now, since 2009, David Webb has championed the cause of nonprofits, offering advocacy and training across the nation. It's during this time he identified a crucial gap, and that's the need for a payroll provider that prioritizes client welfare over your profit margins. Thus, Giving Payroll was born. As a licensed ADP payroll provider, Giving Payroll combines dedication to exceptional customer service with ADP's reliable processes, specifically tailored for nonprofits. And with that, I also want to introduce Laura West. She's a sales executive and regional partnership leader for the Southeast market at ADP. In her 11 years with ADP, she's worked with a myriad of industries, but has always found her way back to the nonprofit segment. She began working with small businesses with less than 50 employees. After 6.5 years, she moved into the middle market, where she began supporting organizations between 50 and 1,000 employees. She presently leads a team of 8 associates and is responsible for creating partnerships with mid-size and large CPA firms across the Southeast. And with that, it's my pleasure to hand it over now to David Webb.
Our agenda today is dogs and why we love them. That was my joke, but we got left behind. This is not actually what we're covering about, but these are my dogs, and my cat that loves my dogs. So our real agenda today is 2024 and 2025 federal tax changes, 2024 and 2025 state tax changes, 2024 and 2025 W-2 changes, leap year, FUTA and SUTA, the ERC, abuse and government crackdown, audits everywhere, and then work smarter tools and tips to save time and money. And I know that says W2, but I think it's W4. An account has 3 C's in it, but hey, I'm only going to be really glossing over the state changes and the tools and tips to save time and money. Everyone's going to get a copy of this slide deck after the fact. Feel free to go through there and really investigate the things there. I'm going to touch on both of those topics, but I just wanted to let you know that if you needed to spend a little bit more time or wanted to go over a specific state or needed to dig deeper, you could go ahead and do that or talk to one of your accountants. A lot of what we're talking about today is stuff that you should probably talk to your accountant over. And when I say accountant, you should hopefully be working with an accountant that is a nonprofit specific accountant. I know a lot of nonprofits budgets have a tendency of not being able to afford the larger firms in town that have a nonprofit expert, but it's very important that you find an accountant that specializes in nonprofits, because I've seen them create a lot of messes, and we'll touch on one of those, which is the ERC abuse. So you're going to see this popping up throughout the webinar. Please feel free to ask questions along the way, and then I will be able to answer our questions, or Laura, or either on the fly, or we'll address them verbally on the call. Like either I'll read it to Laura, or Laura will read it to me. So to get started, the 2024 and 2025 federal payroll tax changes. What are the federal payroll tax changes, and what does it mean to you? And there's a few changes in 2024. So the payroll tax rates, they have changed, have been unchanged for 2024. FICA tax is still 15.3%, and FUTA, which we're going to get into that a little bit later in this webinar, tax is still at 6%. Social Security tax cap for 2024, the maximum amount of earnings subject to Social Security tax cap has increased to $168,600, up from $160,200 in 2023. I know a lot of nonprofits don't probably have a lot of employees, maybe some executive directors that we have on the call. So, and then Medicare, the Medicare tax rate remains unchanged at 1.45% for both employers and employees. There is an additional 0.9% Medicare tax on wages over $200,000 for single filers and $250,000 for joint filers. The federal income tax brackets, there's been adjustments for inflation, has slightly increased the income limits for all tax brackets, which can affect withholding amounts. And then finally, the Form 1099 NEC for non-employees compensation. Businesses must file this form by January 31st, 2025. I think in the past, it was overlapping when you were having to file your tax returns. And now they're changing it, so you have to make sure that you are following the laws. So, with that being said, the 2025 changes are pretty much just one thing, which is the expiration of the Tax Cuts and Jobs Act, which is the TCJA. So the individual income tax rates will revert to their pre-2018 levels, which means higher federal income tax withholding rates. Employers will need to adjust their systems if you do not have a payroll provider like ADP to account for the new withholding tables. So standard deductions and personal exemptions. The standard deduction will be roughly cut in half, and the personal exemption will return. These exemptions will impact the calculations of your federal income tax withholding from the employees' paychecks. Child tax credit will reduce, affecting the net employees who claim this credit. I know that's more of their tax return type of thing, but usually when these types of changes happen, there's a ripple effect, and you could have employees changing their withholdings up and down based upon these types of changes to ensure that they're able to pay their mortgages. So the federal income tax bracket adjustment for inflation have slightly increased for the income limits for all tax brackets, which can affect withholding amounts. And then finally, the SALT, which is the state and local tax deduction cap, the expiration of it will allow taxpayers to deduct their full state and local taxes, which could again lead to higher take-home pays for some employees, affecting payroll calculations. So what does all that mean? So key considerations for employers: adjust payroll systems. Employers need to update their payroll systems if you're not using a service like ADP or QuickBooks Payroll or one of those service providers, to ensure that you change the correct withholding for the rates and the standard deductions. You need to communicate to your employees. I kind of see this happen a lot, is that there's changes that are being made and employees are not informed, and a lot of times employees have their expenses balanced out very to the dollar. And when you disrupt that balance, it usually rolls to you. So, and again, consult a tax professional, work with tax advisors to understand the full impact of these changes on your payroll, overall business finances. A lot of times things that affect your finances are not being consulted with an accountant. And it's really important for you to ensure that you have your fiduciary responsibility to your nonprofit. So for additional resources, you can always go to the IRS, state tax authorities, and then again, your payroll software provider. So ADP always has all of this information that you could contact them if you had ADP or Paychex or any of the other payroll providers. I like to say ADP because I have Laura on the phone, so I don't want to be insulting.
Yeah, get it right, David.
So Q&A, I've seen it rolling. I don't know. Yeah, we will be touching on FLSA. Does anybody have any questions regarding the federal stuff? I know I kind of blew through that. I was just ensuring that we stayed on track, on time. It is not the most interesting subject in the world to be talking about. I'd rather probably stick talking about my dogs. So,
to answer Melissa's question really quickly.
Oh, sorry. Side note, speaking of dogs, mine is taken care of, and I'm here, just so you know. But I will be quiet, so please continue.
Well, no, that's okay,
Totally
Jeremy.
fine.
And I know we didn't start those two poll questions, so we could kind of gauge who we're talking to. So let's see. Let's go ahead and launch those now.
While he's pulling those up, Melissa, to answer your question as well, there are different CPA and accounting firms that will specialize in different industries. So if you guys are a political subdivision, not specifically nonprofit, there definitely are industries that are, accounting firms that will specialize in that particular industry. You'll just have to be able to kind of search for that. So underneath like a firm's page, you can look under like what we do, or even services, in order to figure out the industries that they might specialize or focus in.
Awesome. And it looks like we have a mixture of different levels on the call with us today. So we have executive directors and operation managers and a few what hat am I wearing, or it depends on the day, and payroll managers and bookkeepers and accountants. So we have a nice mixture of everyone on the call. So thank you everyone for joining. Having a diverse audience is very helpful, especially when it comes to questions. Because an executive director might have a different question than an accountant or a bookkeeper. And when one of those people bring up a question, and then it makes the other people think about those. So it does make for a better experience. So I'm going to go ahead and end this now. I'm going to share the results with everybody of this one, just for a few moments, so you kind of gauge on who we have. So there we go. And then one other poll that we have is how large is your organization? So let's go ahead and launch that one. And then so can we kind of get a gauge of, you know, what tax brackets are we talking about? What requirements do you have? Okay. So it's looking mostly like what I was expecting. Probably more smaller organizations than larger organizations, which is perfectly fine. But again, it looks like we have a nice diverse audience on the call with us today. And a lot of people that are responding. A lot of times you guys just look at these poll questions, you're like, yeah, no, I'm just going to go ahead and just check my email real fast. So, okay, perfect. Thank you so much. So yeah, it looks like mostly we have small organizations. And I'm gonna go ahead and share those results and then we'll keep it moving. Okay, there we go. Okay, so now the big topic. And again, this is skip slides. The 2024 and 2025 state payroll tax changes. What states are implementing changes and what does that mean to you? So some changes that are coming your way is minimum wage adjustment. Many states are increasing their minimum wage. For example, California minimum wage for employers with 26 or more employees will rise to $16 an hour, and Florida's minimum wage will increase to $13 per hour effective September 30th, 2024. So it's right around the corner. State unemployment insurance wage base. Several states have updated their unemployment insurance wage base. So Colorado has increased theirs from $20,400 in 2023 to $23,800 in 2024. And Connecticut has increased theirs $15,000 to $25,000 in 2024. So I'm going to touch bases on this a little bit later. Most of you are not going to be impacted by this. And then paid leave. Some states are implementing or updating paid leave requirements. For example, Illinois will have new statewide paid leave laws effective January 1st. I could probably spend an entire webinar speaking about paid leave, and it kind of is in the realm of HR. So I'm not going to touch basis on that during this webinar, but it's something that you probably should look into for your state. It should become a habit yearly to go, what changes are happening in Illinois around payroll into Google, and then get yourself, your 3 or 4 accounting firms that are trying to cross-sell you their business by telling you what changes are happening in that year. It's really beneficial for you to not be blindsided by these things, especially because they could affect your expenses. So
one thing to add to this as well, and David, I don't want to steal your thunder. A lot of times what a lot of companies don't necessarily realize as it relates to minimum wage. And Georgia actually, so I sit out of the Atlanta market. Georgia is actually one of those states that up until 2023, their minimum wage was actually less than the federal minimum wage. So that's always used to be my fun fact. Federal minimum wage used to be $5.25 in the state of Georgia. Obviously, federal minimum wage is $7.25. So what's important for you guys to know is that dependent on where you guys are across the country, you have to go with the minimum wage that's most advantageous for the employee. So for example, state of California, obviously a higher minimum wage than the federal minimum wage. However, if you're within a state jurisdiction or a city jurisdiction within a state, and that city jurisdiction has a higher minimum wage, you have to give that employee the highest minimum wage, whatever is most advantageous for that employee. So just making sure that you guys are staying in compliance as it relates to employee minimum wage. So really sticky thing for you guys to potentially be, on the line for. And the Department of Labor doesn't really mess around with that as it relates to potential back wages, back taxes, things like that. So I always like to kind of throw that in there because, minimum wage is something that a lot of people kind of lean on the federal government to set. But it's not just as easy as saying, hey, federal minimum wage is $7.25 or my state's minimum wage is this. If you have employees that are working in multiple states, or especially with like virtual work environment at this point, it's a lot to really make sure that you're managing properly.
Thank you. No.
Back to you, David.
I agree. So these are our list of state rate changes as well as unemployment rate changes. Again, I'm not going to go over all of these lines individually. I have highlighted all minimum wage changes on this document. If you see a dollar amount that does not say no change under the unemployment wage base, that means there's been a change in that as well. So again, I'm just going to kind of gloss over all this. The most increase that I've seen was probably about $2, which to an employee is pretty substantial. So I think Hawaii is $2, and I think New Jersey went up $2 as well. So again, these are something that you have to consider when it comes to Bruce, I'm sorry, I got distracted by a question. Bruce, I had no idea that tribal minimum wages were still under minimum wage. I am not familiar with tribal minimum wages at all, and I didn't realize that there was a discrepancy there. So now, thank you for sharing that information. Now I'm going to have to investigate that a little bit further. I don't actually work with any nonprofits. I don't think personally that within our organization that are within the tribal realm. So again, I have one for every state plus DC on here, highlighted all of the rate changes. For the most part, in 2024, we've had a change in almost every single state. Um, but wait, we have more for 2025, but 2025 list is not that extensive. So I think there's only about 14 or 15. And again, I'm not sure why Alaska's highlighted on here because it says, oh wait, it's not announced. That's why. Oops. So again, there is not many rate changes because they haven't really came out yet, but there is a lot of changes coming. See, there's Alaska on here again. But again, we're having some changes in the states. Most of the rate changes have not been decided yet. You might want to go ahead and look into seeing what your state is doing. And then in 2025, there's no notable payroll changes for most states. And that's why I have them listed all right here. So again, I just kind of glossed over that. This is not something that we're diving deep in, because then we would be spending a lot of time on specific people's states that are not relevant to everybody else on this call. So I would say always make sure that you look up your changes every year, call your payroll provider, speak to your accountant, make sure you are aware, because there are things that can affect how much you are paying. So with that, I'm going to go to the Q&A. Okay, does anyone have any questions? I don't see any questions currently. And then if there's no questions, because I probably didn't go in deep enough to, we'll move on to the next, which will be you, Laura.
This is me, yay. So I do actually think that it was supposed to say W-2 changes. Last time that you and I did this webinar, it was when the big 2020 W-4 came out, and it was the total change. That's why I think you're thinking W-4.
Oh, okay, that's why I was like, wait a minute, I thought we were talking about the W-4. Why is it say W-2?
No, it's okay. The last time, so for anybody who maybe didn't join us last time, that we hosted this, because, for some reason, Grant Station decided to let us, host another webinar with just our crazy selves. Last time it kind of coincided with whenever the new W-4 form came out, and that was a bear. Because realistically, that form was already confusing. I know I worked with a ton of small businesses that employees weren't necessarily filling out the form properly. Hate to say that still to this day, not a lot of employees are actually, yeah, it was, Jeremy, you're right. Hate to say that not a lot of employees are still filling out the W-4 form correctly, but it's definitely gotten better as far as, employees filling out at least some of the correct information. But today we have updates for you guys on W-2 changes. So some of the changes as it relates to W-2, and I'm going to throw in some updates around 1099s as well. And 1099 contractors for you guys. So, from a 2024 change, the electronic filing threshold has changed. So there used to be a requirement for all electronic form filings of W-2s to be filed electronically so long as they exceeded 250 forms. Now, obviously, by the sounds of our first or second poll, you guys might have that filing. However, knowing that it's now been lowered to 10 forms, so if you have 10 or more W-2s that you are completing every single year, you now have to file those electronically. So that does provide some additional complexity. I know that there are some small businesses, some small organizations that I work with that, they'll order a pack of, W-2 forms, or they'll print them out online. They fill them out by hand, or they, type them into the computer and print them out that way. There is obviously the reduction from 250 down to 10, which just really kind of pushes the big importance of you guys leveraging some sort of payroll or, accounting system that can support you with payroll or the W-2s. Obviously, a selfish little plug for ADP. I have been with ADP for 11 years, so I've drank all the Kool-Aid. I think that ADP is wonderful from a small business perspective and very cost effective, in my opinion. But tons of additional area of opportunity for you guys to be able to leverage and take advantage of some extra support. It's not even shameless. It's very shameful. The other thing that I'll share with you guys from a 1099 perspective is that, mandatory electronic filing that also has been reduced for 1099 to where if you have more than it's also down to 10. So what's important to know is if it's 10 or more 1099s as well, there is a requirement for those to be filed electronically as well. What I also want to kind of plug here too is if it's any combination of W-2s and 1099s, so long as those two numbers together exceed 10, that e-file requirement is in place.
Oh,
that's big,
kind of
big changes. Yeah, I think a lot of people probably
all of our clients basically, because even the small nonprofits have a tendency of having quite a few independent contractors that could push them over that 10 mark.
Absolutely, yeah, and it's definitely a big difference. There's not actually a ton of like outsourced third-party providers from a payroll side of the house that are actually e-filing the 1099. So making sure and even just kind of double checking with your current provider, whether that's ADP or not, checking with your current provider that they are actually keeping you in compliance on the 1099 front. That's realistically been where I've seen the biggest change. The W-2 front, if you're using any kind of third party or outsourced payroll provider, they are e-filing your W-2s for you. So that's great news. There's no concern there. Now, from a Box 12 Code 2, oh, go ahead.
They don't file your 1099s though, because they have to do the 1099 report themselves, right? So what about happens if ADP is filing that, and then that brings them over the 10 and they're still responsible for filing? Doesn't that cause an issue?
There's options. So some of our clients opt to, well, no, so it's really up to the client. So that's a great question. So some of our clients choose to process their 1099 through their ADP payroll platform or through their ADP system as well. And obviously ADP is intuitive enough to be able to say, hey, listen, their overall count of year-end forms exceeds 10. So we will e-file them, but other clients that I've worked with beforehand are like, hey, I have few enough 1099s, that I'll just do it on my own. And so they obviously leave themselves open to that potential risk of not doing it properly.
Okay, no, that's good information. Thank you.
Yeah, a lot of times what I find, and especially in the nonprofit industry, typically in most payroll providers, even like a QuickBooks payroll, they're going to charge you and the billing will work on a per employee or a per contractor perspective per payroll or per month. And so the way in which that will work is a lot of times they say, hey, I'll just handle the payment of my 1099 throughout the year, and I will make sure to, take care of the 1099s on my own. And then at the end of the year, that can come back to bite them. How do quarterly 941 filings count in the total so the quarterly 941s are different, Karen, than the W-2 and the 1099s. So a 940, a 941, any of your state quarterly filings and federal quarterly filings, those don't count in that count of 10. So a little different there. It's just truly the W-2 and the 1099s at year end. That's what's inclusive in the 10 count. Any additional questions on that before I move on to Box 12 Code 2? Man, that sounds like really sexy. A really sexy topic here, guys. No? I think I got them all for now. All right. There's a new code 2 that's been added to Box 12 reporting Medicaid waiver payments that are excluded from gross income for federal tax purposes. Realistically, again, just really focusing with your payroll provider, whether that's an internal, technology or internal system or an outsourced third party, making sure that there's not any kind of weird tax overrides. That is one thing that I can tell you guys from my experience with ADP. That is one thing that I can tell you guys from my experience at ADP is there are a lot of payroll systems, especially in-house systems, accounting softwares, general ledger, ERP systems that will kind of let you do whatever you want to, whether it's in compliance with the law or not. So just be super mindful of setting up like non-taxable reimbursements, non-taxable earnings, different things like that. Just making sure that you guys are in compliance with tax code. and your accountant, your payroll company, I am more than happy to help you guys with all of the things as well. Probably going to be, regretting that one here shortly, offering up myself for that. But I'm more than happy to kind of talk through all of that as well. I am by no means a tax expert, but I've been through
I'll send everyone your cell phone number in the chat, Laura. So then
Please do.
they can
Please.
Okay, good.
Please
And
do.
then this next point are ridiculous.
Yeah. If more than 10 filings and not using e-files, what are the options? In order to be in compliance with the new 2024 IRS e-file rule, Beverly, you will have to move to an option for e-filing. So there are not necessarily any other options now that they've lowered that form requirement from 250 down to 10. So I do think that a lot of what the IRS is trying to move towards is more of a proactive reporting. I think that whenever employers are mailing in paper copies of W-2s and mailing in paper copies of 1099s, knowing that it used to be up to 250, it would take the IRS a little bit longer to process them. So at the end of the day, the IRS is going to get their money as fast as they humanly can, and so they're kind of pushing for e-filing so that way they can process everything a little quicker. So unfortunately, there's not a ton of options now that that has been lowered down to 10.
Thank you.
Of course.
I appreciate that answer.
I'm trying to answer them as I go through while also not talking too fast. I have a habit of doing that.
Oh, yeah, I talk way too fast. Yeah, I get told to slow down a lot. So sorry, guys. If I happen to talk too fast, just tell me to slow down.
Just got to ask how many Red Bulls he's had today. From a form layout and instructions perspective, here's the wildest thing. You have to use black ink. You'd be shocked how many people actually use blue ink for the Form W-2 entries to ensure that they are machine ready. And then the forms obviously cannot be double-sided. So that's if you somehow have under 10 forms that you are submitting. But it sounds like most everybody on this call, maybe with the exception of a handful, are probably going to hit that 10 mark.
Yeah, and then I just find it that you have to make sure that they're printed in the 12-point courier. So I know your payroll providers are going to do this automatically. But if you are creating these forms yourself, or if you're not currently using a payroll provider, or you're using a software where you're manually doing all of this and it's creating the stuff for you, you need to make sure that you're staying compliant. I find it ridiculous. I feel like a machine should be able to scan. I mean, I guess when you get into like Comic Sans or something, it's not if you're just sending your W-2s that way.
Oh yeah, Century Gothic. There's some interesting scripts out there.
Okay.
From a reporting emergency savings account, so Secure 2.0, Secure 2.0 Act, I feel like that's probably more common, less in the nonprofit segment, since a lot of those rules are more so in place for 401ks, not necessarily 403bs. However, if you are a nonprofit, obviously that has a 401k plan in place. Please make sure, obviously, that you are kind of getting yourself up to date and knowledgeable on Secure 2.0. A lot of the changes that are in place around that, and myself as a millennial, a lot of the people who even work for me and the younger millennial as well as Gen Z population, the biggest change that a lot of employees have really started to enjoy from a retention standpoint as well is their ability to actually take what they would be contributing or what they're paying towards student loans. And essentially you guys have the opportunity or the option to be matching that towards a potential retirement contribution. However, the reporting emergency savings account, that is something also that is in there now. So allowing the inclusion of contributions to that pension linked emergency savings account in the employer sponsored retirement plan. So all of that has to be reported properly on the W-2 as well as making sure that everything is on there from a safe harbor perspective. So that way there's no additional penalties there. Obviously, I would be remiss if I didn't mention the fact that there are penalties and fines, potentially up to $660 per form without maximum limits. All of the things, all of the legal things that I don't like to dabble in because it's not fun. But again, expressing the importance of partnering with either a CPA or accounting firm that has the proper technology in place to support and do your payroll in a positive and compliant fashion, or be working with some piece of technology that can keep you guys in compliance here. ADP or not, that'd be my non-shameless plug. Yeah, or my non-shameful plug. So yeah.
Awesome.
Yeah. Next slide.
Okay, 2025.
There we go. 2025 planned W-2 changes. So all of these are things that you guys just need to be mindful of. Again, if you're outsourcing your retirement plan, if you're outsourcing any of your payroll functionality, they will already be taking care of a lot of these things for you guys. But in 2025, there is obviously with Secure 2.0 provisions that will increase the catch-up contributions for any employees that are 60 or above starting in 2025. All of that obviously has to be reported on the W-2 form as well. There's additional reporting that will be required for any kind of additional 401k, whether it be Roth 401k, Roth 403b, 457 plans. All of those things are going to have additional reporting requirements, as well as additional reporting requirements for those ESAs, that emergency savings account, as part of Secure 2.0 too. COO.
Okay.
Perfect. And then there's also additional reporting for any kind of domestic abuse victim. So this is actually a new exception that will allow early withdrawals from retirement accounts for any victims of domestic abuse, obviously requiring careful reporting to make sure that nobody's taking advantage of it. I know that David's going to be talking about people taking advantage of ERC and all of the things that go there. I obviously would like to think that there are not people who are taking advantage of potentially being a domestic abuse victim, but there's also reporting that will be required for that. But it's great that they'll be able to potentially have early withdrawal from the retirement accounts with no penalties there. Additionally, there'll be the simplification and modernization initiative, which hopefully, again, continue to simplify and modernize the W-2 form. Again, they're going to try and upgrade it. They're going to try and make it user-friendly, make it even more digital if that were possible, just to make sure that everybody can take advantage of it. But all of these changes, again, are going to be pushed out on the IRS website. The other thing, this will be more of like an ADP plug, but not even like a using ADP service. So like, David, don't think I'm doing it. One thing I would definitely recommend that everyone does is follow or subscribe. ADP has a really great basically like blog. It's called Eye on Washington, and any kind of legislative changes that are going on, they will post about it there. So I personally get email updates. It's not any kind of spam updates. It's really the important things that are coming down from Washington, but would highly recommend that just as far as making sure that you guys stay abreast with any kind of IRS changes that will impact you guys from a payroll perspective, any law changes, things like that.
Awesome. Does anybody have any questions about that? It was doing really good at stopping and answering them along the way. So I don't think we have.
I forgot the Q&A thing was here.
Yeah, it's okay. Okay, we'll move on to leap year. We have.
Do you want me to go through leap year, or did you want me to pause back at the FLSA piece?
I would say just let's talk.
The FLSA was supposed to be sandwiched.
We're going to include an additional slide deck that will have FLSA on there. Laura's going to stop and talk to it currently.
Perfect. Do you want me to now?
Yeah, I would say, just kind of go over it. Again, we have 20 minutes left, and we have this here and a few other topics. So,
yeah, perfect. Awesome. So what I will say around the FLSA overtime rule is if you have any kind of hourly employees or salary employees, the FLSA stands for Fair Labor Standards Act, and there is an overtime pay requirement that is now being updated. So a few years ago, they already put this law in place to where basically they were increasing the minimum salary amounts for employees that basically had to pass certain different types of tests in order to figure out whether or not they fit into a bucket of a highly compensated employee. A lot of what you can think about is whether or not employees are exempt from overtime or non-exempt from overtime. The way that you can think about it as myself as a salary employee, David as a salary employee, it doesn't necessarily matter dependent on what our salaries are, or I guess I shouldn't say it doesn't. It might not necessarily depend on how many hours we work each week, dependent on our salaries. If we exceed 40 hours in a week or 80 hours in a period, depending on whether or not I'm exempt or non-exempt from overtime. The reason why this is important is because there might be situations and scenarios for you as an organization where it makes more sense for you to increase an employee's salary as opposed to Perfect. Where it makes more sense for you guys to increase an employee's salary to that new threshold, as opposed to potentially running the risk of paying what they might have to be paid for overtime. So the pre-July 1st, it was $648 per week that the salary or the earner would have to have earned. After July 1st, it's $844 per week. So it's a pretty substantial jump. There will be another update in January 1st of 2025 to where that jumps again to $1,128 per week. And so it went from roughly $35,500 to $43,800, and it's going to jump again in January to $58,000, about roughly $700 per year from a salary perspective. And that's not taking into consideration any of those high earner, or high earner or highly compensated employees. So tons of additional things for you guys to obviously keep in mind. There are definitely situations to where, like I mentioned, makes more sense for you to increase that salary as opposed to potentially running the risk of paying what an employee might make or what they might potentially earn from an overtime perspective. But again, ADP, that Ion Washington piece, can definitely make sure to help you guys with any of the updates and any of the changes that are being pushed out from an FLSA perspective. You have a part-time worker that works 20 hours a week. If she works 30 hours in a week, do I have to pay her time and a half? No, overtime is 40 hours a week. The only time that 30 hours a week is actually considered full-time is when the Affordable Care Act is in play. And the Affordable Care Act is what is basically, health insurance that needs to be provided for companies with 50 or more employees. As far as the Department of Labor is concerned, it's 40 hours. ACA through the IRS is 30 or more.
And
I hope that answered your question.
There's some states that count more than 8 hours per day, right? It's either 8 hours or 40.
There are certain states that are actually, it's 40 hours for the full week, but there's some states that do actually report daily. So keeping that in mind as well. So if somebody maybe works 30 hours a week, but they worked 10 hours in one day, absolutely. There might be some changes depending on the state in which you reside or work.
Awesome. Thank you so much.
Yeah, correct.
Can we please put the salary?
Yeah, the salary increases, those rates, Jenny, are going to be in the actual slide deck where, who was telling me that my picture was great. Lydia, you're my girl. You're my girl, Lydia. I told David, funny enough, I had sent him my updated picture, and I hadn't seen David in person in a while. And I told him, I said, since I last saw you, I cut my hair, I dyed it dark, I went through a whole existential crisis. You're not going to recognize me, short brown hair now, if you pull up that picture from 10 years ago. So thank you, Lydia, for the compliment. I appreciate it.
Awesome. Okay. Okay, cool. And then if you want to move on over to leap year, and then
leap year, absolutely.
I'm gonna try to get just a screenshot of the numbers uploaded to the chat for them.
Yeah, I'm taking that screenshot right now as well to see if I can load it. So from a leap year perspective, so oh man, you beat me to it. So from a leap year perspective, the number one thing that I always like to position and explain to businesses is if there is a company or if there is an organization that is paying semi-monthly or monthly, those organizations are pretty straightforward as it relates to the number of payrolls that you are going to have within a year. So semi-monthly, obviously that's two payrolls within a month. The dates in which you do those two payrolls, totally up to you. Obviously, if it's monthly, once a month, kind of hard to mess that one up. However, making sure obviously on a leap year, such as 2024, I guess. Do we have a leap year in 2024? Did I miss that one? Making sure that in the event that you pay on the first, 15th and the last day of the month, you're not missing out on anything. The biggest difference, if you guys were not aware of like semi-monthly versus bi-weekly is going to be 20 pay periods within the year versus semi-monthly is 24 pay periods within the year, just 2 times a month versus 52 divided by 2.
Perfect.
I'm seeing some additional questions in the chat.
Yeah, I just answered it for
Yeah.
James.
Yeah. what I've seen some companies as well also move towards with the FLSA rules is that some of them have actually benefited from switching an employee to hourly instead of being salary. And they basically will figure out what their true hourly rate would be to correlate to the exact same salary that they would have received annually. There's different ways around it, but obviously with the increasing salary thresholds, being a salary employee on especially a small business is really challenging because some of those salaries can be really tough. So again, obviously here, making sure that you are picking the best pay date or the pay frequency for you. I always personally recommend, check dates on a Monday, very difficult to manage, just because a lot of payroll providers or third-party providers would require you to process your payroll on a Friday, just due to the fact that banks aren't necessarily open on weekends. However, if you're looking at, again, a semi-monthly pay frequency or a semi-monthly pay period, so 2 times a month, just being mindful of making sure that your employees are being paid in a timely manner. So if you need to push that pay period or that check date up, if it does fall on a weekend, there is some obviously additional administrative, work that comes along with that.
Awesome. Thank you so much.
Mm-hmm.
Does anybody have any questions about that? If not, we can move on because we don't have much time. Okay, perfect.
Sorry.
This is no, it's okay. This is the topic that's near and dear to my heart. So, excuse me. So, FUTA and SUTA exemptions. Are you paying when you shouldn't? So, federal unemployment tax, FUTA exemptions for nonprofits. Nonprofit organizations are exempt from income tax under Section 501c3 of the Internal Revenue Code, which generally exempt them from FUTA. That means they're not required to pay federal unemployment tax. I have a handful of clients that were informed by an accountant that was not experienced with nonprofits, that they were required to pay that because that was an accountant for businesses. And I have clients that have digged their heels in that don't have a high turnaround time and they're paying FUTA and SUTA. So, again, as a nonprofit organization, a 501c3, you are not required to pay FUTA. You are just throwing away money. So, again, I would highly suggest to speak with an accountant that is familiar with nonprofits to ensure that you are within guidelines. State unemployment taxes, while 501c3 organizations are exempt from federal unemployment taxes, they're generally still required to comply with the state unemployment tax laws. So each state has their own rules and regulations regarding unemployment insurance, and nonprofits must register and pay the unemployment insurance tax unless a specific state exemption applies. And I say this while saying that there's usually always the reimbursement option for nonprofits. So unless you have a high turnaround time to where you are, having, employees fired and quit on, 5-10 a year, and this is an ongoing basis, you should be always picking the reimbursement option. If you are picking the paying the insurance, you're just giving away money that you'll never be able to get back. But the reimbursement options, they allow you to only pay when things are being filed. So usually you get to opt out of the regular state unemployment tax system and instead reimburse the state for actual unemployment benefits that are paid to former employees. It's usually cost effective unless you, again, hire and fire a lot of employees. The reimbursement method means that organizations pay the state only when the former employee claims the benefits. So again, I have a handful of clients that are paying this that they shouldn't. They don't have a high turnaround time. Their state allows for reimbursement. And the woman at the office that when they were signing up the account told them that it was better for them to be paying it. And then so now, one of my clients I'm talking about, that's the reason. So again, this is something you should probably talk about with your accountant. I did see a few chats pop up. If your org is pending 501c3 approval, do you need to pay FUTA until you receive determination? No, thank you, Laura, for answering that. So
yeah, I got you.
Okay. So please note, even though you're exempt from 501c3 organizations, must still file Form 940 annually to report their exemption status and any other necessary information. Important consideration is documentation and compliance. You should always maintain proper documentation to support.
David, slow down.
Sorry. Thank you, Rebecca.
Too much Red Bull.
Normally, I have my friend Carla is like, slow down. So, you're still required to file the Form 940. So even though you are exempt, And then just always ensure that you're remaining compliant, even though the state may allow you to do reimbursement, you're still having to file these. And again, always consult with a tax professional that specializes in nonprofits. They are going to be able to give you the correct advice. If you're unsure if your accountant, has been working, just ask them how many nonprofit clients they've had, how long they've been working with nonprofits. So, Q&A.
I'm fielding a few questions in the chat. David, if you want to keep going. Bonnie,
Okay,
I got you if you'll just respond in the chat. Okay, yeah.
Okay, cool. Okay, so this is another subject that is near and dear to my heart, just because as being a co-owner, I could probably say that having so many of our nonprofit clients take advantage of the third-party solicitations for the ERC credit after the fact was concerning. It was something that we met with and we talked about here doing before those companies even popped up, because it would have been an easy way for us to make money. And we chose not to go that route because we're not tax professionals. And I felt like it was taking advantage of our clients. So the government action against ERC abuse and nonprofit double dipping with PPP loans. So the IRS has been intensifying their efforts to crack down on improper claims for employee retention credit and has identified a number of instances of abuse included by nonprofit organizations. So here's a few key points, and then the issues around double dipping with the PPP loans. ERC abuse. So high-risk claims. The IRS identified a substantial number of high-risk ERC claims that show clear signs of being erroneous. These include filings that do not comply with eligibility guidelines set by Congress. The IRS is planning to deny tens of thousands of these claims after the fact, after they've already paid them out, and they've already disallowed claims over $1 billion. So there's audits, investigations happening right now. Oops, that might have been me. There's audits and investigations that are being done. They've increased their audits and criminal investigation efforts, targeting both the promoters pushing dubious ERC claims, which those are the third-party businesses that told you that you were fine double dipping from your PPP loan year with backdated ERC claims, and the businesses that filed with them. So they've really heightened the scrutiny around these to ensure that they protect the government against fraud. So I know they went after a lot of the PPP people first, but they were really cracking down on ERC. So nonprofit organizations were eligible for the ERC if they met certain criteria, such as experiencing significant decline in gross receipts or having operations fully or partially suspended due to COVID-19. Audits are being done by the IRS to ensure that these guidelines were met for corporations and nonprofits. So that if you are a nonprofit and you took this ERC and you were not actually declining, and I've had a few clients that operated just fine, if not went up during that time, then you didn't qualify for some of these, and they are going after that, these organizations. Double dipping allowed. Organizations cannot use the same wages to qualify for both the PPP loan forgiveness and the ERC. You're prohibited from claiming this expense twice in the same period. And I outline this because a lot of our clients have personally double dipped. It's something that we identified and targeted and also let them know to talk to an accounting professional. So federal guidelines require the costs paid with the PPP loan funds, which result in the loan forgiveness, cannot be charged to other federal awards, which that would include the ERC. So compliance and best practices is nonprofits should carefully review their eligibility requirements from both the PPP perspective and the ERC to avoid compliance issues. Consult with a tax professional and accountant. I would say most of our clients that took advantage of this did not speak with their accountant before doing it. They just went ahead and did it because they saw it as a way to be able to take advantage of a government program. But again, nonprofits are beacons of good for the communities that they serve, and that starts at your organization. So you need to understand that adhering to the guidelines is crucial to avoid penalties. And I say this with a case study, and I'll talk about one of our nonprofit clients, and hopefully they're not on the call because they'll email me and say, that's definitely me you're talking about. So a nonprofit had an IRS audit happen to them due to PPP loan and ERC. And it dragged out for months. They had to provide them years worth of, documentation. They had to pay the government back $20,000 because they should not have taken the ERC that third party company directed them to. They also lost a grant because of it, because the money that they had were being funded by a grant, and they owed $20,000, and that basically messed up their entire books, all because of a greedy ERC company. Again, I'm not an accounting professional. I don't know exactly, what happened between the IRS, them, the grant, and everything, but it ultimately cost them $20,000 in a grant. So, a review showed that 30% of our clients, our nonprofit clients, took advantage of ERC, and they shouldn't have. This is not including the ones that did take them. So from advice on third-party companies that didn't care if they got audited. So it's really important that if you are an executive director and you know that you took advantage of an ERC credit through a third-party company, I would review with your accountant what you did to ensure that you catch it before the IRS. And we're outside. They did a little program that organizations, I think it ended in May, were allowed to say, hey, I messed up. And the government forgave, I think, half of what you owed them. But we're past that time period now. So now we're in the time period of, well, you screwed up and now you're going to have to pay for it. So with that said, Laura, did we have any outstanding questions, or were you getting them?
I want to make sure that I got all of the questions. If for some reason I didn't, can you just put your name down in the bottom of the chat? I got, how do you change from quarterly? Bonnie, I think I answered your first question. Pat, I got yours. Ramon, I came back and answered yours. Joanne with the best takeaways. Thank you. We had a question around what's a reliable source of ERC and knowing legally if a business/nonprofit is eligible. And then Barbara asked which government grants have to be excluded from ERC and which has to be deducted from ERC wages, if you know that, David.
I do not. And these are the exact questions that you should be directing to your accountants. I'm not a tax professional, so I can't answer to those questions.
Thank you, Judy.
But those are the questions that you need to be asking to ensure that you are following the lines. The best resource is the IRS still has the guidelines listed on their website. But again, I would speak to your accountant, because nobody understands your financial information like you understand your financial information. So like your whoever's responsible for your books. So you might have been completely safe. You might have been in a position like you were. Like, I'm so happy for you, Rebecca, that you guys spoke with your accountant before you did anything, because the amount of our clients that were affected by these third-party companies was disheartening to me. And again, you are all beacons of good in the communities that you serve, and I would hate to see you put in a position to where you could possibly lose funding or even have to close down over doing something that you thought was okay and it turned out to not be okay. And I mean, even on our side, we're a corporation, and we were very hesitant about anything because we weren't really affected by COVID. We all work remotely. We're, it's 100%, remote company. There's no brick and mortar store here. So, people still paid, their payrolls. So, let me see. Okay. And then with the ending of it, I'm going to go ahead and leave it with, I know how much time do we have left? Okay, we're just ending. These are just some tips and tools to save money and time and stay compliant. I do not have experience with most of any of these products. I just know that our clients talk about them. So I wanted to just leave you with some of this. Financial management, QuickBooks, and Wave, even though I'm pretty sure QuickBooks just purchased Wave. So that's probably going to end up having a fee here soon, which are accounting softwares. We have fundraising and donor management. So Donor Perfect and Bloomerang. Some of these are kind of expensive. I've looked into them. However you pronounce Asana and Volunteer Hub for project and volunteer management. Grant management, Instrumental and Foundant. And then cost saving strategies, TechSoup. If you don't know TechSoup, I always promote them. Nonprofit discounts, always ask for a nonprofit discount for any of your service providers or software providers. And then of course, our amazing host, GrantStation, where you could get training like this and support for your grants. So here's some free HR resources for you, some toolkits, forms, templates, dictionary, HR webinars, newsletters. They're all free for you. And then I will probably not have any questions around that, but we'll wrap up that and I'll answer some questions. We do have a special for everybody on the call for any ADP. So if you are interested in our services, you can always go and sign up there. And then Laura, do we have any other questions or?
I got to Judy's question. So Judy, I will shout it out loud just in case this is helpful to everybody because I know the chat's popping off like crazy. So she was mentioning that her board was considering just decreasing the total hours worked by some of her staff instead of adjusting the salary. So that is something I shared it in the chat that some employers are doing to combat the increasing salaries associated with the Department of Labor FLSA laws. The one thing that I will caution you on with doing that, and I put this in the chat too, in my experience and tenure at EDP, sometimes I've seen employees kind of have a little bit of pushback, and I've seen it in a sense sometimes impact company culture or employee culture because they feel like all of a sudden the employer is like very, big brother on top of what they're doing. But definitely to answer your question, Judy, something that you guys can do if you're already tracking hours that makes it even easier for you guys. And then recording slides and chat. I was chatting away in here. So I hope that I got everybody's questions. They want to increase the hours to meet the minimum salary. Yeah. So the two options that I've seen really work well for businesses is either, there's three, increase the salary, which that's the crappiest of the options, because I know you guys aren't just necessarily sitting on, especially in the nonprofit world, sitting on extra money that you can, put towards employee salaries when a lot of it is going to be going back into your true mission and the reason that you guys are in business. So some of the alternative options that I've seen employers do is transition some of the employees from salary to hourly. And the easiest way to do that is you take their salary, you divide it by the number of hours per week, so 40 hours a week, and then you multiply it by the number of weeks or the number of pay periods that they're going to actually, have in the week. So that would find you their weekly salary rate times the number of times that they're being paid in the year. So I can put that in the chat for you guys as well, just easy, quick calculations on how to potentially support that. And then as far as the alternative option is, I said, what was my first option? Increasing salary, changing people from salary to hourly. The third option is obviously just tracking the hours for your salary employees.
Wonderful. My video no longer showing? Oh, it is. Wonderful. Well, I know this wasn't the most exciting content, everyone, but I really appreciate you joining. Please feel free to reach out if you have any questions. My email is david@givingpayroll.com, which you could find. There's support@givingpayroll.com, but you can reach me there too. And then, if you guys have any other questions, I really, feel free to reach out, and we really appreciate you coming today.
Any final thoughts there, Laura? Any things people should keep in mind as they go about their payroll ways?
Again, this is the shameless plug. If you guys have any interest in obviously leveraging a system or a technology such as ADP, obviously connect with David and he will be able to get you guys in touch with me. Like he mentioned beforehand, I've been working with nonprofits for the last 11 years of my tenure with, companies and organizations from one employee all the way up to several thousand. So nonprofits have a very special place in my heart. My goal and my method entirely at my career at ADP is to never lose a client over price. I can't give it away for free, of course, but I want to make sure that payroll and accessibility and the compliance associated with payroll is something that you guys have access to. So really hopeful that we are able to get connected in more than just me and David talking to one another with Jeremy and his dog. I hope that your dog's okay, Jeremy. She was very chatty earlier. We didn't even get the shameless plug about my dogs earlier, but that's okay. I really appreciate the time. You know why? I almost sent you pictures of mine. I figured why, but I appreciate the floor. I appreciate the ability to speak with you guys, and for everybody that just, put up with all of my stuff in the chat. So thank you guys so much, and hope to be able to host another one of these sometime soon.
Yeah, thank you so much for joining. Thank you, Jeremy. I really appreciate everything.
Visit GrantStation to see our latest online education offerings in the form of live webinars, interactive workshops, and on-demand learning. GrantStation.com, your fast track to funding and online education.